and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts and you can connect live with us. But before that, let's have a look at what the markets are up to. So Cheryl, after a decent start, the markets and especially Bank Nifty seem to be drifting in the red.
Absolutely. A very good morning to you, Shrishti. And looks like Monday blues are kicking in for the benchmark indices. As we speak, we have actually indeed slipped into the negative territory. You have Nifty that's trying to hold on to some sort of a positive bias, but there you go, as you can see it on your screen. Flat as flat can be. Let's take a look at what Sensex is doing. That one is in the negative territory. Nifty Bank underperforming the benchmark indices, whereas the broader markets that are shining bright when compared to the benchmark indices. Both mid-cap and the small-cap index holding on to strong gains, very strong gains as we speak. You cannot even see a glimmer of a disappointment in the performance coming in for the broader markets. They are actually at the day's highest point when it comes to the small-cap index. Talking about sectoral indices, you had Nifty Auto Index that hit a record high level in today's trading session, but right now it's given up all of those gains in the negative territory because you have M&M that's the top loser on the Nifty as we speak. 1.5% downtick coming in for Mahindra & Mahindra. You have SBI Life also that is at the day's lowest point, 1.3% downtake. Asian Paints, Nestle, HDFC Life are other set of counters. Even ITC, for the matter of fact, that one also is at the day's lowest point as we speak. But on the flip side, you have the metal counters that are seeing a raging rally at this point in time. You have the metal index that's hit a record high levels. We will in a short while from now in our BNS and Lens segment try to decode what exactly is happening in the metal space. So be it Tata Steel, Coal India, Hindalco, all of them are among the top gainers on the Nifty, followed by Ultratech, Grasim, JSW Steel, NTPC. All of them are seeing very good strength in today's trading session. What is heartening to note is the fact that if you look at the advance decline ratio, very much still tilted in the favor of the advances. So yes, maybe this is just the initial downtick that we are just seeing on the markets. Let's put the spotlight then on individual sectors. Like I said, Nifty Auto Index after hitting a record high level is now towards the day's lowest point. Metal Index is at a record high level. FMCG Index is among the top sectoral loser, 0.6% downtick coming in for that particular index, as well as auto is in the negative territory. But you have Realty, Metal, PSU banks holding on to strong gains. So that's the way how the markets are looking like at this point in time, Shrishti.
Okay, that was about the market action for now. But onto the Buy Now, Sell Now lens, we have the double bonanza for our viewers because like Cheryl mentioned, we will be talking about the metal index which has hit a record high levels. But apart from that, we will be focusing on the stock of the day on the back of a big news flow, that is Kotak Mahindra Bank, wherein Uday Kotak has tendered its resignation. And Kotak Mahindra Bank has actually underperformed in the recent past, but the clarity on succession could make the stock outperform going ahead, and that's the take coming in from Nikunj Dalmia, Managing Editor, ET Now and ET Now Swadesh. Let's listen into his take on Kotak Mahindra Bank.
See, there are two things here. One is the near term, that why has he decided to step down 4 months ahead of his actual tenure, and second is the legacy part. Now, legacy part is something which, look, if there's a pedestal of great bankers which ever has to be made, I guess Mr. Kotak's name would be right up there in terms of the positioning. He's one of the best bankers in the world. He's created from an unknown brand to an unforgettable franchise, a bank which is built to last, a bank which has created shareholder value and ranks right up there in terms of customer satisfaction. So in terms of legacy of Mr. Uday Kotak, the impact he will have on the banking sector per se, the changes, the fundamental thought with which the governance and with which this great franchise was managed, I guess is quite extraordinary. Now the second and the immediate part, which is that why has he decided to step down early? I will not perhaps read too much into it, excepting the fact that it may be a coincidence that the top three office bearers at the helm of Kotak Mahindra Bank, just a coincidence, but that term will be ending by year end. So I think he's decided, and the reason what he's citing to whatever we've read in the Economic Times is that, look, there is a family commitment, bete ki shaadi hai in November, and then he said that, look, for me, last financial year is over and I pretty much wanted to give the succession planning, and this is the handover for me. So his tenure in terms of, the fact that he stepped down only, I will not read too much into it. Now is the third part. What happens to the stock? The stock is underperformed. Kotak Mahindra Bank, which was at once upon a time commanding a premium of about 5 to 6 times book, price to book, trading at a premium to HDFC Bank, it has been a massive wealth creator, has underperformed. A, because of price, and B, because of overhang of succession planning. The succession overhang planning, I think what Mr. Kotak has indicated that they've submitted 2 internal names. And we understand that one of the front runners there could be Mr. Manian. Now the stock has underperformed, the overhang is there. Because of his resignation or because of the fact that he's decided to step down, the overhang will not be lifted. The stock in a sense will rediscover momentum when markets will get a clarity on how the baton would move. But the stock is cheap now. So I think on bad days, if you start accumulating Kotak Mahindra Bank as a stock because relative valuations are now cheaper than HDFC Bank also, I think for 2024 and 25, this could be an outperforming stock.
All right, so that is the editor's take coming in on Kotak Mahindra Bank, which indeed is the stock of the day. But let's talk about the sector of the day, and that definitely has to be the metal sector. Like I mentioned earlier as well, record high levels is what the metal sector has actually hit in today's trading session, be it Tata Steel, be it Nalco, Hindalco, JSW Steel, Jindal Steel. Anything which has metal related to it is seeing a sharp spike. But why is it that the metal sector is rallying today? Let's bring on board Ashesha, who actually tracks the sector like a hawk, isn't it, Ashesha? What exactly is happening in the metal space? Because today, all of a sudden, you're seeing a sharp rally that's coming in this particular sector. What's aiding this rally and how should one view it?
Well, yes, so we are getting a lot of positive news from China. Remember, China is the biggest producer and consumer of most commodities, and hence any positive news from China is a big positive. Now, we've been talking about Nifty Metal underperformance for the last many months now, but looks like the tide is turning. Now, on a year-to-date basis, Nifty Metal underperformance has now narrowed, and that's a positive, and that's because of the positive news that's coming in from China. In fact, today morning, we have the news where Chinese government has gone ahead and cut down payments for buyers. They've also additionally encouraged lenders to lower rates on existing mortgages. As far as down payment is concerned, nationwide minimum down payment for first time buyers has been reduced to 20% and 30% for second time buyers. So positive news coming in from China, because of which Nifty Metal Index in fact is at the lifetime high today. It was trading at Nifty Metal Index was at about 6,900 earlier in the year, but has now surpassed that 7,000 mark. Chinese economy looks like the government is undertaking a lot of efforts to ensure that economy comes back on track. We have a lot of demand from infrastructure and the housing segment. Remember, weak housing market was one of the reasons why Chinese economy was not performing well, apart from rising debt levels. But looks like the government is undertaking a lot of efforts to ensure that the Chinese economy comes back on track yet again.
Okay, Ashesha, you did talk about the international trigger for the metal prices, but today if we see that the metal stocks are rolling, so in the domestic market, are these companies taking the benefit of the international triggers, and how these companies are placed? Are they companies raising prices?
Well, yes, domestic steel market in fact is doing pretty well. As far as the demand is concerned, domestic steel demand continues to remain strong. Remember, deficit rainfall has proven to be a positive for the steel prices. Steel demand continues to be robust. Ahead of the elections, infrastructure demand is also very strong, because of which demand continues to see an uptick. In fact, as far as steel prices are concerned, fifth price hike is what we have seen in a matter of just 5 weeks. Since early August, cumulative price hike has been to the tune of 5,000 to 6,200 rupees per ton, and steel prices now stand at about 56,500. Strong demand is the primary reason why steel prices have picked up. In fact, Prabhudas Leeladhar came out with a note where they are maintaining their positive stance on the steel sector as we move out of the seasonally weak quarter. So yes, positives coming in. Domestic demand continues to remain strong, and steel prices have also inched higher.
All right, so that's what's exactly happening with the metal sector. Thank you so much, Ashesha, for breaking it down with us, both on the international front as well as what is happening in the domestic market. But let's ask our experts actually, what should you do with the metal space? If you're already invested, then is it a good time, if you're making profits, to book out profits, or you should stay put with this particular sector as a whole? And our experts today are Ashish Maheshwari as well as Aditya Agarwala. Thank you so much, Aditya, as well as Ashish, for joining us on ET Now, especially on Buy Now Sell Now. And Aditya, let me come first to you. Let's talk about technicals. Metal sector actually has been in favor for a while actually. A lot of technical analysts actually turned bullish with the hope that you have the Chinese economy reopening, there will be more sort of gusto when it comes to the growth, and in return you'll have the metal sector do well. But that's not exactly happened as we had expected it to happen. Now you have the government giving in stimulus, therefore you're seeing metal sector actually see a bounce back. But on the charts, do you think this bounce back will sustain?
Hi, good morning, Cheryl, and good morning, Srishti as well. Thank you for the show. Clearly, there is a breakout on the metal index, as Shesha was also pointing out. It's broken out from that resistance trend line of 7,000. Looks like it's headed to 7,950 to about 8,000 levels, which is a big upside on the metal index. And as you pointed out, most of these metal stocks have been underperforming. Look at the way SAIL has outperformed in last two trading sessions. It is trading at I guess a 52-week high, a big up move on SAIL that we are witnessing, a big up move on Tata Steel. Tata Steel hasn't performed at all in the recent times. Even though JSW Steel, names like Jindal Steel, they were outperforming NMDC. But somehow Tata Steel and SAIL were not outperforming at all. They were not participating in the metal rally, whatever little we had witnessed earlier. My sense is this rally is here to stay, and this could have further legs on the upside, especially if I talk about 3 to 4 stocks. A name like a Tata Steel, a JSW Steel, NMDC, Steel Authority of India, SAIL. I think all 4 stocks look extremely attractive on the charts. If somebody holds on to it for at least 6 months to about a year's time, they have good, decent money in the making in these stocks. Just to give you a ballpark figure of what these levels could be. For Tata Steel, I believe a stock can easily test levels of 160 to about 190 on the upside. Yes, that's a big upside on Tata Steel that I'm looking at. JSW Steel could easily test levels of 875 to about 900 on the upside. NMDC could test levels of 150 to about 190 on the upside. Similar is the case with SAIL, could test easily levels of 120, 100 on the upside. So these are some of the stocks which definitely stand out on the charts, and looks like there is some more movement on the upside. And there is a shift also, Cheryl, which is happening, sectoral shift. Maybe because of the China boost to the property sector, not only metals, but look at real estate stocks, look at cement stocks, all these participants are also chipping in. So real estate stocks, as you mentioned, is looking very attractive. It could be a Dalmia Bharat, an Oberoi Realty from the real estate, a DLF. From the cement pack, look at Ultratech Cement trading at an all-time high, Dalmia Bharat. So I believe this entire sector is looking very good, and definitely metals stand out within the entire sector.
Okay, so those are the top recommendations coming in from Aditya, as well as targets on some of the stocks that he highlighted. But Ashish, coming to you, and we did talk about the fundamental triggers for the metal space right now, but it is very volatile sector, very much dominated by the international news flow, and investors are quite cautious when they're entering the metal space. We have seen a great rally post-COVID, but after that it was underperforming the benchmark indices. But with the kind of an up move in the recent days, how much confidence do you have on the fundamental side on these metal counters, and which will be your top recommendations?
Yes, if you see when the metal indices has touched 52-week high today. So this is not something that market was not anticipating, that sooner or later some rally will come. So this rally we are witnessing now. Second, if you see even the performance of like metal companies, for quite some time they were in quite very narrow range. Now that range is breaking up because market was waiting for some stimulus or some trigger so that they can buy these stocks. And those triggers are coming, first of all, from China, like your analyst has already told so many things. Besides this, also what has happened is from the US side, the kind of employment data has come. Now it looks like that in this year, there won't be any rate hike because job market is cooling down there. So this is again a shot in the arm for the metal sector. And we all know that domestically also there's a good demand from all auto companies or FMCG companies and housing sector. So metal prices are quite buoyant now. So all these factors are contributing here. My top picks are here, Tata Steel. I think there's a stock has got now a new level of 150, 160 I'm anticipating. Along with NMDC and JSW Steel, we should watch for. And I'm bullish now in this sector. In my view, this indices has potential to even touch 7,100 mark.
All right, so bullish take coming in from both of our experts when it comes to the metals sector and also sharing which are their topics in that particular sector. But on that note, viewers, we will slip into a break on this edition of Buy Now Sell Now. When we come back, we'll start taking your queries, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us on our WhatsApp number that's flashing on your screen. Do remember to mention your name, the stock that you're looking to invest in. Also, remember to mention your buy price, the quantity, as well as the time horizon that you're looking to invest in the particular counter. In that way, our experts will be able to help you better. And talking about our experts today, we have Ashish Maheshwari as well as Aditya Agarwala on the show. Once again, good morning to both of you, and let me kickstart taking the queries then. And the first one is coming in from Venkat Ramani from Bangalore, and he's holding Sterlite Technologies around 650 shares at a price of 150 rupees per share. He wants to know fundamentally whether it's a good company to stay put with, and should he look to add some more in his portfolio. What's your take on this, Ashish? Do you think that Sterlite Tech is a good company to stay put with?
Yes, Slike Tech as such is a good company to remain invested. Again, two triggers. First of all, there's a import duty related benefit which have come to Sterlite Technologies and HFCL, where now you're not going to get very cheap optical fiber cable which this company makes from China or Taiwan. So this is one trigger for them. And another trigger is as the 5G rollout is happening, so lot more optical fiber will be required on pan India basis. So these companies' products are going to remain in demand, and Sterlite Tech is largest player in this sector. So, in my view, you can continue to remain invested.
Moving on to the next query then, and Aditya, this one is on Bank of Maharashtra. The stock has hit its 52-week high level today, and Kaushik Mitra wants to know, is this a good time for a fresh entry? If yes, then what could be the likely target prices? And if not, then at what price he should actually enter this counter?
Shristi, I think there is still a decent upside left in the stock. He can still look to enter the stock at current levels, maybe with a stop loss at 35 and look for a target of 55 to about 60 on the upside. It will be more of a positional trade because we are witnessing a bounce back and a recovery in the PSU banks. I believe Bank of Maharashtra should also chip in. So 35 will be your decent stop loss, and on the upside, 60 rupees should be your target.
This one is coming for you once again, Aditya. IOL Chemicals is the stock. This one is from Dr. Ravi. He's writing to us from Bangalore. And he has IOL Chemicals around 1,000 shares at a price of 400 rupees per share. He wants a one-year view on this particular counter. How does it look to you on the charts?
Oh, share will definitely hold because after a decent correction, stock to take support at 61.8% Fibonacci retracement level. From there, stock is bouncing back. I believe definitely hold on to the stock. I'm looking at a target of 600 here if he holds on to it for maybe 6 months or longer. And on the downside, 400, which is his buying price, should be the stop loss so that he doesn't incur any loss in case it goes below 400. So with the 400 rupee stop loss, continue to hold, look for a target of 600 on the upside in the medium to longer term.
Okay, moving on to the next one, and Ashish, the viewer wants to know, is this a good time to enter HDFC Bank for a fresh buy? This question is from Ramesh, and he also wants to know, Titan, good time to sell now. He didn't share his buy price, but assuming that he must be holding this counter, and after the up move that we have seen in Titan, good time to book out profits.
Yeah. HDFC Bank, actually, I'm not that big fan now, because the problem is the majority of holding is with foreign institutional investors, and they are not buying nowadays Indian banking stock, or net they are into selling mode, and domestic funds are not buying HDFC Bank as such, and they are focusing more on the grade 2 banks as such. So in my view, HDFC Bank you can avoid, and if you want to add some other bank in the sector, in my view, IndusInd Bank or Bandhan Bank will be better bet.
All right. This next one that I have is coming in from Ramamurthy, writing to us from Bahrain. This one is for you specifically, Ashish. He wants to know about EIH, whether it's good time to buy EIH, and he wants to know if yes, then between EIH and EIH Associated, which one should he pick?
So my vote will go for EIH only. I think it's better to be the leader as such. But if you are still, because the stock has really moved up quite a bit, and some consolidation will take place from this level. So instead of EIH associate, EIH will be better bet. But my best bet in this sector is Lemon Tree Hotel. In my view, those asset-light models which Lemon Tree, etc., are having, they will take these stocks to a new high. So even you can contemplate to even put some money into Lemon Tree along with EIH.
Okay, moving on. And Aditya, the next question is from Matthew from Muscat, and he's writing to us to know about DCW. He's holding 1,000 shares purchased at a price of 52, and the other quantity, the stock that he has is 100 shares of Gujarat Fluorochemicals at a price of 2,750 rupees. At this point in time, can you advise him whether to hold both of these counters or move out?
Talking about DCW first, Srishti, I believe he should continue to hold on to the stock. There's a bit of a sideways consolidation that I see going on currently here. So once the consolidation phase is over, I believe stock will resume its upward journey. I'm looking at a target of 60-64 here with a decent, which is a decent upside still. On the downside, I believe 50 is a good support area. So with the stop loss at 50, continue to hold. As far as Gujarat Fluorochemical is concerned, I believe this entire sector is looking attractive now. And there come a point of time when soon these stocks will also start to participate. So the specialty chemical space is looking good, and specifically Gujarat Fluorochemical, I believe one should continue to hold on to it. Can see decent upside in this stock as well.
Right, this one is coming in from Santosh from Kerala. I'm unsure if you track this one by any chance, Aditya. Diligent Media, do you track this one?
Cheryl, unfortunately not. Let me see if I can pull out the chart. Diligent Media, is it a 3 rupee stock by any chance?
Oh, yes, it is. Sorry. So we will not take the query on air. It's a penny stock. So we'll not talk about this one. It's my bad. This one is coming from PV Ananta Narayanan, and he wants to know about United Spirits. He has about 260 shares now mentioned the buy price. He wants to know what's the view on this one and recommendation. He's saying the stock has not given dividend for a long time. Mr. Ashish, what's your take coming in on United Spirits? He's not mentioned the buy price. That's the problem. But nevertheless, fundamentally, where do you think United Spirits lies?
So the stock is near 52-week high only. 1,050 was high, and still the stock is at 1,020 odd levels. But totally a laggard. If you see performance vis-a-vis its peer set, this stock has not given great return the way Radico Khetans or Associated Alcohol or some distilleries have given. So in my view, USL and UBL both will remain underperformer, because whatever the market share they are losing, these second rung of liquor companies and beverage companies are acquiring that market share. So my suggestion will be not to buy United Spirit or United Breweries, and look at instead Radico Khetan or Som Distilleries and Breweries.
Okay, moving on. And Aditya, the next query is from Harvinder Arora from Mumbai, and he's holding 2,000 shares of MMTC, bought at a price of 40 rupees 11 paisa at this point in time. He should continue to hold on or move out of this one. He's looking out for a short-term move in this.
Srishti, stock is up, locked in an upper circuit, I believe, today on very good volumes. And in fact, we had witnessed a similar kind of a volume last week as well. So there is buying present in the stock for sure. Since its buying price is extremely low, I would suggest keep a trailing stop loss in the stock closer to about 46 rupees and look to exit somewhere around 60 rupees. That happens to be the major resistance for the stock. Stock has made multiple attempts to cross 60. It hasn't done so in the past. So 60 could continue to act as a resistance. So 60 should be a target, and I believe 46, 47 should be a stop loss.
Aditya, this one is for you, and this one is come from Srinath. He's writing to us from Chennai. RVNL is the stock that he's asking his query on. He's holding about 1,000 shares of RVNL at a price of 130 rupees per share. He wants to know whether he should book profits or continue to hold, and if hold, up to what levels should he continue to hold on to it?
Giselle, I believe one should continue to hold the entire rail stocks, and they just continue to make new highs. I believe RVNL 2 looks very attractive on the charts. Continue to hold. Stop loss here would be around 145, and the target would be 170. So 170 is your target, 140 is your stop loss. Continue to hold. If it crosses 170, the next target would be 185. So first target 170 and stop loss is 145.
Okay, moving on. And Aditya, once again coming to you because this query is on NHPC, and the viewer name is Ashish from Mumbai, and he wants to take that can you suggest a good entry range for this particular counter? How are the charts looking like? And going ahead, any likely target price on this?
Shrishti, I believe stock has entered into a sideways consolidation phase, and I don't see a big upside immediately coming into the stock. If he's looking for an entry range, maybe look for a correction closer to about 48, 47 rupees. That could be a good entry point for the stock. Otherwise, I'm not too gung-ho on the stock because this is a slow mover. If you're looking to add this in the portfolio, then maybe yes, the targets could be 65. Otherwise, I would avoid the trading in the stock.
Okay, Ashish, this one is coming for you, and this one is coming in from Yuvaraj. He's holding M&M in his portfolio. He's saying the stock has underperformed recently. He wants to make a switch to the chemical space, and he wants to know which two stocks he should actually look at. He already has Chemplast Sanmar on his mind. Do you think that should he switch out of M&M because of the recent underperformance in the counter? And if you say yes, then do you think chemical sector is the apt sector that he should look at? And in that, Chemplast will be one of the stocks that you will look at?
Yes, I agree with viewer view also. That first of all, this automobile sector has given very good returns already. So some consolidation is bound to happen now, because now investor will are looking at those sectors which have really not performed, or where a lot of value is there. So there's the reason we are witnessing a lot of buying of late coming into agrochemicals, chemicals, specialty chemicals, even textile sector. So you can switch from Mahindra and Mahindra to Chemplast Sanmar. This is a good bet. Besides this, I also like Atul Limited and Lakshmi Organics. I think these two stocks can also give good return along with Chemplast Sanmar.
Okay, so that's the take coming in on which auto companies that you can look at right now. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back in order to take more of your stock-related queries. So stay tuned. Welcome back to Buy Now Sell Now show, where you get answers for all your stock related queries. And onto the show we have Ashish as well as Aditya to answer the same. And moving on to the next query then, and Ashish, coming to you, this query is from Sumantra Chatterjee, and he's been holding 150 shares of Max India since the past 6 years and wants to know that what are the future prospects for this particular counter, and is this worth holding this counter at this point in time as well?
For instance, what price has he given the price?
No, Ashish, she didn't mention his buy price.
Okay. So I think if 6 years he is holding this stock, there might be something really big in his mind that this stock will deliver. But still, in my view, for last few months only, we are witnessing some rally in this stock, which was not there the case earlier. But fundamentally, the stock is good, and it can give you very good returns if you are having another 3-year time frame, because of the businesses that they own and the holding of other group companies, what Max India is holding. So I think you can remain invested.
Aditya, this one is coming from Srinivasan, writing to us from Mumbai. We did speak about the metal sector at length at the start of the show, but he has sale. 500 shares of sale at a price of 71 rupees per share. And the other counter that he has is IRFC, 500 shares at a price of 30 rupees per share. He wants to know what should he do with both of them, continue to hold or exit. Also, he's saying that if yes, hold, then he can hold for the next 6 months. What's your take on sale as well as IRFC? IRFC did see a huge block deal also take place today.
To be honest, Cheryl, I believe one should continue to hold sale because I'm extremely bullish on the stock. Like I mentioned, last trading session, stock has witnessed a decent upside. Decent would be an understatement. I think it's a very good outperformance that we're seeing on good volumes. So like I mentioned, it is trading above 100 rupees. I'm looking at a target of 125, 130 in Steel Authority of India. One should continue to hold definitely. And with a stop loss maybe at around 100 rupees, stock offers a very good risk to reward. Talking of IRFC, I believe it's already trading at extreme overbought levels, despite the fact that there's a block deal which has taken place. I would strongly suggest put a trading stop loss in this stock, because once these stocks starts to correct, then it can slide extremely low. So 60 rupees would be the decent trading stop loss that I would recommend to put in the stock. And on the upside, stock can test levels of 75 as well. So put a stop loss, a trading stop loss at 60 rupees for sure in the stock, and continue to hold sale.
Moving on to the next one, and this one is on RBL Bank. What's your view on this, Aditya? Is this a good stock to enter for a medium to long term?
Srishti, because finally these stocks are coming out of that consolidation phase and the rut that they were trading into, be a Bandhan Bank and RBL Bank. On the upside, one can look at immediate targets of maybe 270 to about 275. If that is taken out, stock will have a big upside. 400 levels can also be tested. If somebody is already holding, continue to hold. If somebody is looking for a fresh entry, they can take a fresh entry as well. Put a stop loss at 210 on the downside, and you'll have decent money in the making in these banks.
Quick reminder for all of our viewers, please do not try to call us on the WhatsApp number. We will not be able to answer your calls. Okay, the next query is coming in from Samba Shiva Rao. He's writing to us from Vijayawada. This one is for you, Ashish. He has Tata Chemicals 100 shares. He's saying he has purchased this 11 months ago at a price of 1,065 rupees per share. He's saying finally the stock is actually now arrived at his buy price. So should he look to actually exit out of Tata Chemicals and in fact look at some other infra auto stocks for the long term? Or do you think that after underperformance, chemical is making a comeback, so stay put with it?
I agree. After long hibernation, these stocks are a comeback, and you should not be in hurry to sell now because this is a common mistake which investors do. They hold the stock for quite some time, and whenever the stock price comes near to buy rate, they try to exit, and then prices start moving in not direction. So my suggestion will be to remain invested here because again they are the largest player of caustic soda along with any other chemical. So remain invested here. My target for this stock will be around 1,200 rupees in next 6 months.
Stay invested, and 1,200 is the target coming in for Tata Chemicals. But Ashish, what's your view in some of the counters that are been buzzing recently? That is MTR Tech, Cochin Shipyard, as well as GRSE. Ashish wants to know, I beg your pardon, Ayush wants to know, are these good stocks to enter for the next 1 to 2 years time horizon?
Yes. Though the stock, there's a good amount of rally which has happened in this stock. But the one thing we must understand, there are very few stocks are available in this sector in the defense related sector. And these are the companies which are going to get the maximum order from government. And the way their order books are full for next 2 to 3 years, there will be no dearth of cash for these companies, and they will keep on reporting higher profit quarter over quarter. So even MTAR technology, we have seen a huge run up in this stock, but it might be still a long way to go from here because this is a stock which was very static between 1,800 to 2,000 rupees, and now a lot of money is chasing such a stock. So be it MTAR Tech or GRSE or Cochin Shipyard or Majgaon, I think all these stocks are having a long-term sustainable growth story. So on SIP basis, gradually you can start active.
Okay, this one is coming from Vishal. One more coming your way, Ashish. Actually, he's a long-term investor, and he's saying, as a long-term investor, is it the right time and the price to further accumulate ITC, Zomato, or Indian hotels, for the matter of fact, or is there any other nifty company except the metal space with a good valuation that he should look to enter and accumulate for the longer term? What's your take on this?
Yeah, in fact, ITC, Zomato, Indian Hotel, all three are good picks. ITC, after the correction, whatever we have seen because of their hotel demerger related euphoria, now this dust is settling down, and we'll see gradually stock will again start northward journey because FMCG is a sector which certainly one should be bullish if you are bullish on India. Second is again ITC hotel, this Indian hotel. Again, I'm expecting even this quarter they are going to show record profitability because the way the hotel bookings are taking place and the tariff have gone up. You can't go wrong in Indian hotel asset. But the only thing is it's slightly slow and steady, but ultimately will give you good return. As far as Zomato is concerned, again, the food delivery business is doing pretty good. Blinkit, they are now reduced losses, and in the next 1 year, they'll be in decent profit also. So Zomato is again a stock which institutional investors are buying, in fact, now. So we can buy all these three stocks.
Moving on, and Aditya, the next query is from Madhuri, and she's sitting at a 5% loss in M&M Finance as well as L&T Finance. She wants to know, can she average both of these counters, wherein she's looking for a short-term upside in both of these?
M&M Finance first, Srishti, I think she can look to average the stock, though I don't suggest if you're on a loss to average a loss trading stock. But again, average with a strict stop loss, keep the 20 DMA as a strict stop loss line, because if that is broken, stock can see further downside. So my stop loss level here will be 285 to about 288. This should be a stop loss line for M&M Finance, and you can look to average at current levels. Look for a target of 330 to about 340 on the upside. If that is taken, you could look to exit. Which was the second stock I missed out?
Aditya, the next stock was L&T Finance, 5% loss in this as well.
Oh, that one should clearly look at holding on to it, and in fact, average also. This is one stock maybe she got in at a wrong entry point. It's very strong on charts. I see low targets in northward of 140 here. So average at current levels, 120 should be a stop loss, and look for a target of 140 first, and that is taken out. I'm looking at a target of 160 on the upside.
This one is coming in from Sri, he's writing to us from Kochi, and he has about 60 shares of UPL, purchased at 767 rupees per share. He's asking what should he do with this particular counter? Should he look to exit, hold, or actually average at current levels in case if it benefits him? Also, he has CIE Automotive. 501 is the buy price, good time to accumulate further, also short-term targets. First, let's talk about UPL, Aditya. What should he do with UPL, given the fact that we've also seen trouble in that particular counter when it comes to stock price performance? And CIE Automotive, what should his strategy be here?
As far as UPL is concerned, Cheryl, I believe he should continue to hold because stock has already seen the pain that it had to oversee. There could be a short-term pop in the stock. It is very close to its immediate support. In fact, it has taken support, and from there it's bouncing back. I see stock testing levels of 640 on the upside. That should be the place where he should look to exit between 640 to 650. Happens to be the 200 weekly moving average. If that is taken out, then yes, there could be further leg on the upside. But at the moment, I'll play with targets of 640, 650 on the upside. Put a stop loss at 575 to about 580 on the downside. So that is something he should continue to hold. As far as CIE Automotive is concerned, I think that too he can continue to hold. There is some more upside that he can see in the stock, not to panic at the moment.
Okay, Ashish, the next query is on Dreamfolk Services, the stock which saw a sharp cut in the month of August. And Mr. Singh from Pune wants to know, is this a good counter to enter for a long-term perspective?
Yes, as far as long-term perspective is concerned, I think this will be a good fact. Though we have seen very sharp correction from 800 levels to 500 levels, but I think the worst is getting over for this counter, and the way things are, the way travel is going up, I think this company will continue to do well. Though last quarter we haven't seen very good set of numbers, because quarter over quarter there was quite dip in profitability. But I think this was one-time event, and this quarter onwards again we'll see some price. So for a price target of 600, surely you can enter in this stock, but keep a stop loss of somewhere 470.
Guys, that's the take coming in on Dream, folks. On that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries, viewers, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your queries then. And this one is coming from Vidya, who's a short-term trader. And she's writing to us from Chennai. KPI Technologies, KPIT Technologies is what the counter that she's going to talk about. Aditya, average price of around 1,050 is what she's bought this particular stock. Also, she has M&M 1,485 rupees per share. Wants to know, is good time to book profits in these counters or continue to stay put?
I would suggest book out profits in KPIT Tech at current levels. Looks like it's reached overbought levels. Could see a correction. There are other better opportunities in this sector. Look at them, which have underperformed and showing still good, decent upside. You can make a switch in this space from KPIT Tech. Maybe look at something like a Persistent Systems or a Coforge or an LTTS, LTIM. This entire bouquet of mid-cap IT stocks looks good to me. This unfortunately can correct. Talking of Mahindra and Mahindra, I think that too can see some bit of profit booking from current levels. It has underperformed. There are better opportunities out here like Maruti, which has actually broken out into an all-time high territory, finally trading above that 10K mark consistently. So I believe there is more room on the upside as far as Maruti is concerned. So we can look to switch from M&M to maybe a Maruti.
Okay, moving on. And Ashish, since you were talking about the FMCG space, what's your view on Nestle? OSN Reddy from Hyderabad wants to know, is this the right time to buy Nestle India for a long term?
See, Nestle is always a good story if you ask me in the longer run or short run, because because the very steady kind of returns this stock has given to its investors. So I think Nestle, HUL, ITC, etc. They are slow and steady kind of stock, and you can continue to remain invested there in the long term perspective. My target by the end of the year is 23,000 rupees for Nestle.
All right, this one is coming from Pratiksha from Muscat, and she is asking a query to you, Aditya. She's saying, since we have the World Cup, Cricket World Cup approaching really fast, she wants to know which is the stock for the short term that she should look at that is likely to benefit from this event, like the hotel stocks, the beverages, the QSR space. Do you have your eye out on any of these counters which is likely to benefit from a very, very short term, and what sort of target you have in mind?
So I believe one should look at hotel stocks mainly predominantly, and maybe a travel tourism stock. And most of these stocks have been running, Cheryl, to be honest. Lemon Tree is something which definitely looks very strong on charts. Indian Hotels also looks very strong on charts. These two stocks do stand out from the hotel space. I believe there is decent 6 to 7% upside making in these stocks. As far as travel stocks are concerned, unfortunately, there aren't too many listed players which look very attractive to me on the charts. Maybe an Indigo can fit into the picture because of the travel surge that we will see. There were news floating around that a lot of people are booking hospitals because they were not getting hotels. Unfortunately, all the hotels are booked up. So maybe a hospital stock could also be looked at purely because of the surge in hospital beds which will be occupied. But no, on a serious note, I think I'll stick to two stocks, Lemon Hotel and Indian Hotel.
Okay, moving on to the next one. And Ashish, what's your view coming in on Escorts? The viewer name is Krish and he's been holding 59 shares at a price of 2,900 rupees. The stock has been on the roll, recently touched that 3,300 mark as well. So going ahead, should he continue to hold on or can he actually add at current market price? He's looking to hold this for the next 3 years.
So if you're having 3-year time frame, my target for this stock will be around 5,000. If you are first talk about numbers. And again, the rationale is, which I have given earlier in the show also, that now this is a Kubota company, and Kubota is market leader in the world for lower horsepower tractors. And Escort plant, where they have taken equity, is going to be their global supply, a very important part of global supply chain. So from here, they will do domestic as well as big export business also. So this is the reason I like this stock, and whenever you get opportunity to buy this stock, whenever it is down, like today auto stocks are down, that is why you're getting this stock also down. Should be always use an opportunity to accumulate, because over a period of time it has to go up, and 5,000 mark is my target 3 years.
That you've actually set for Escorts, Ashish. I don't think that you like the stock. Looks like you love the stock. 5,000 rupees is the target you set for the next 3 years coming in for Escorts. But let me ask you, Aditya, not on Escorts, but Piramal Pharma. Have you taken a look at the charts of this particular counter? Because Ravi from Chennai wants to know whether he should enter this one right now.
too bullish on the stock because 110 is the resistance. Once that is taken out, maybe then I will look at adding the stock aggressively for a trading bet for targets of 120 on the upside. At the moment, I'll still skip getting into the stock. Once it crosses 110, maybe then I'll look at buying the stock loss at 100, and the first target will be 125. Next target would be 140 on the upside.
Okay, moving on, and with this, viewers, let's kickstart taking all your queries in the rapid fire session. And the first query for you, Ashish. Kamal from Delhi has bought shares of SW Solar at a price of 380 rupees. Wants a target for the next 1 to 2 years.
Just like slow and steady kind of a stock, SW Solar. So in my view, you can exit once at 400 to 425 range and shift to some better stock. Even I like Suzlon at this price point if you can buy that.
Okay, another one coming your way, Ashish. Linde India, you have Dr. Bhavesh who's bought it at a price of 525 rupees per share, about 60 shares, making spectacular returns. What should your strategy be? Stay put with this one for the long term?
Hold till 10,000 rupees, which I'm expecting maybe next year.
Okay, Ashish, the next query also for you. This one is from Poonam, holding 109 shares of Nippon Life and Asset at a price of 215 rupees. What's the outlook on this particular counter?
This is something which I don't like too much, so I'll advise to stay.
Okay, Aditya, we have Ram, who's a senior citizen from Kakinada, asking about DV's Laboratory, 6 shares at a price of 5,010 rupees per share, holding since November 2021. What should he do? Exit, hold, or average?
Continue to hold. I wouldn't recommend to average, but continue to hold for a target of maybe 45 and about 4,600 on the upside.
Okay, Aditya, Rakesh Gupta from Delhi, holding 200 shares of HUL at an average price of 2,460 rupees. The stock hasn't been showing good up moves in the recent past. So what's the outlook going ahead? Any targets?
It's actually looking weak, Shrishti, to be honest, on the downside. 24.10, 24.20 is the needed support. If that is taken out, I would see more correction in the stock. I would suggest keep a stop loss of 2,400, 24.10 on the downside. If that is taken out, exit from the stock. It does make sense to hold on to a stock if it's not doing much.
Okay, K. Parthasati, a senior citizen from Chennai, has Coal India. Ashish wants to know what should he do with this counter. 185 is his buy price. Should he book profits or wait for some more upside in this one?
No, wait for some more upside because now commodity stocks have started moving. Coal India is also moving. So remain in this.
Okay, that's the take coming in on Coal India, one of the top gainers in Nifty 50 today. But with this, we are completely out of time in this edition of Buy Now Sell Now. Thank you so much, Ashish, as well as Aditya, for joining us today and helping all our viewers resolving their stock-related queries. But with this, viewers, it's a goodbye from me and Cheryl and the entire team who put the show together. Thank you so much for watching, but don't go anywhere. Markets at noon will take the action ahead.